Welcome to the AccendoTraders Group. This is our weekend wrap-up report for May 11, 2008. AccendoTraders.com, effective trade plans delivered daily. And as we go through our weekly routine, we add in a couple things on our weekends to help us prepare for our trades, and that's looking at the sectors for trends and looking at some newsletter blogs to see what some of our experts are saying about the market. And always, we want to make sure that we have time to spend with our family and have a life. Last week, as far as economic news, all three major indexes ended down for the week. Oil dominated the week as it had a final settlement price of $126. What economic data that we did have, for the most part, was positive. We had ISM showing expansion, and initial claims and trade balance was lower than we expected. The April same stores, for the most part, were all positive. But those of us who are chartists or who are looking at the market from just a chart price graph standpoint will say that this was a natural place for us to retrace, because although we made into we crossed the psychological barrier of 1400 for the S&P 500, but we did go to the 200 exponential moving average, and we're pulling back from there. And so we hit another level of resistance, and we're pulling back. So it is natural there, and it does make sense. So when we look at it this week, you can see we really don't have a lot going on this week. We do have some inflation data out on Wednesday along with crude, so that's going to have some impact, but not a lot of A-level news. Definitely want to see what's going on with the retail sales on Tuesday, the CPI on Wednesday, and Michigan sentiment on Friday. Tomorrow we have Treasury budget, not too impactful, and after the close we have FLR, that's a stock that we've looked at, and again we have our split plays that we've been looking at all week. So let's go ahead and look at the sectors and see which ones are moving up and down. As we begin to look at the sectors and see which ones are moving up or down, which one have money coming in and out, we're looking at how the money's coming out with this proprietary tool here, cash flow accumulation, to see if money's coming in and out. And first up, we have hotels, and you can see for the most part, this one has been in a nice consolidation range here from about 310 down to about 280. So until it breaks out of this range here, I'm really not going to bother too much with hotels. Again, you can see there's a range for hotels. Basic materials have come back up. They bounced off the 10 here. So like to see a breakout above 520 here, 519. But I'm going to put them in the bullish camp. Looks like there's some money coming in there. Looks like there's some money coming in. Utilities, you can see the consolidation still kind of going on here. So going to pass on them. Builders, again, some more resistance breaking 400. Casinos showing a little weakness here. Look like they're consolidating, but you can see the 50 is still holding up as firm resistance. And so it doesn't look like we're breaking back up 1,000. So just like last week, I'm going to put casinos in the bearish category. Certainly as the economy is getting tighter, certainly people have less money to spend and lose. Coal looks one of our best sectors here, so definitely like coal. Banks showing some weakness here, definitely showing some weakness, but until we break this $75 range, I'm not going to go full bearish yet, so I'm going to hold off on banks as bearish, just consolidating. Biotechs consolidating, drugs, pharmaceuticals. I am going to go possibly bearish here on pharmaceuticals, especially if they break here. I know we got some more to go to get down here, but this looks, I definitely think there's some weakness in pharmaceuticals. Internet's one of our better sectors, showing some great strength here. Want to see it break 200 here, 205. So liking internets. Gold, possibly. Gold's in the middle here. We're at the 50 again. So let's see. We got a rising 3 going on here. So if we can confirm above the 50, possibly going bullish on gold. Software, liking software along with internet, 203. Insurance, not really much going on here with insurance. Oils, certainly as oils continues to rise, and we're about to break high here, so liking oil services. Retail, showing some weakness. Stocks continues to show some strength, although starting to level off a little bit. There's definitely some resistance here about 405. Transports, the oil is finally starting to show up here, and they're going down. Not going to go bearish yet on them, but they certainly are looking weak. Brokers, last week we were bullish on them. Now they're kind of sitting here, so we'll have to see what we think about brokers. Not sure yet. Natural gas, still looking nice, so I like natural gas. And oil, again, looking well. So on the bullish side, we like basic materials, coal, internet, software, oil services, stocks, natural gas, and oil. On the bear side, we have the pharmaceutical sector, the casino sector, and right in the middle, I'm going to go with gold in the middle, and I'm also going to put brokers in the middle to see what they want to do. Okay, so now we're ready to begin our educational portion of our video. We're using the book Trading in the Zone by Mark Douglas, The Shift to Mental Analysis. It's a portion of the book that we're on. And we're talking about, we've been talking about fear a lot and how fear skews our point of view of the market. And thus, you know, as a teacher, I've been a teacher for going on 9-10 years now, and one of the things that we always talk about is the self-fulfilling prophecy. You know, if you don't think a child can achieve, he won't, or he or she won't. And it's the same kind of thing in the market, that if you only see negative things, then only negative things will happen. And so what can we do to achieve that consistency? And typically what we do as traders is we jump from strategy to strategy. When I started off, I went to invest tools, and there's certainly some advantages to invest tools. What I didn't like about them at that time, now they may have changed, but this was about 3-4 years ago when I went, you know, paid $3,000, went there, and they said, "Ooh, you've got to learn Bollinger Bands. If you want us to teach it, it's $22,000." I could just laugh thinking about it, but that's the way they were. They're like, you know what? Now that we showed you there's a how to fish, we want you to pay us another $20,000 for us to actually show you where the pond is, and I didn't like that. So, but the guy stressed, you gotta learn Bollinger Bands. You gotta learn Bollinger Bands. So I started Googling it, and I came across Better Trades, and it was funny because I went to their thing and I had no intention of buying it, but I was really impressed with their presentation, and I didn't actually attend their Market Essentials class, so I shelled out another $3,000. And I will say that from the standpoint of learning how to trade and learning the basics about being able to get in the market and trade, Better Trade does a better example. Investor was about selling their product, selling their proprietary tools, whereas I thought Investors was like that. Better Trade was more about at least trying to teach you a little bit about the market. Anyway, so I'll go into Better Trades. I've met some people and I formed a group, and we were all about Darlene Nelson's and trading cues. I won't go there talking about what I feel about that, but what I will say is that we had all these people, about 100 people, and we were go-getting, and we started to, we had a Yahoo board, and we went to another board, and then we were meeting on not PayPal, on we were using one of the online social networking chat rooms that just is leaving me right now, but that's not the point. But what happened when we first started is that we were jumping. Ooh, let's do crit trading cues. Ooh, let's do this. Ooh, let's try this. Ooh, futures, let's try that. And we were so spread all over the place that we weren't consistent, and more importantly, we were getting frustrated. And it got to the point where I finally said, you know what, I'm going to do this. And at that time, I wanted to follow one of the Better Trades instructors, Marquette Latimer, and her momentum trading. I'm going to do this. Anybody else talking about anything else, you can talk about it, but this is what I'm doing. And that's when consistency started to happen for me. When I just defined who I am, what I was going to be as a trader, and focusing on that. I don't knock any of these strategies out there, and I've since added more into my wheelhouse. But my point is that learning Bollinger Bands, learning moving averages and candles, and the Three Amigos with Ryan Litchfield, stochastics, RSI, MACD, those are all good. But until you define who you are, and until you define what your trade plan is going to be, and how you're going to trade, and what you're going to trade, and when you're going to trade it, you're not going to be consistent, because you're just going to be, jumping from thing to thing to thing. And more importantly, you have not addressed the mental side of trading. To get the full version, download the podcast. Always, we want to thank you for your feedback, and to get more information about our blog, my how to develop your own trade plan is there, and my story on why having a trade plan is getting ready to go up this week. As always, trading your own risk, and I will talk to you guys tomorrow. Happy Mother's Day to all. We all love our mothers, and we really appreciate all that they do for us. Happy Mother's Day.